Traders, it is Wednesday, September 25th, and it is time for our weekly live event. Hope your trading's been going well. Every single week, we've had these events that drive the price action, so we've tried to stay pretty balanced. We've had some longs, we've had some shorts that we've highlighted. Last week was no different. So I'm going to go over my previous picks. It's what we do each and every time. Harry, how are you doing this week?
I'm doing well. I'm having a lot of fun with NVIDIA this week. Certainly, uh, did well. The market here just seems. I haven't traded yet this morning. Closed everything this at the open. Just kind of waiting to see where the market goes. It looks like it's a little bearish today, but I'm good. You?
Very good. Yeah, things have been good. And, NVIDIA, you have been bullish on that for a very long time. And we can talk a little bit about that during the course of today's live event. Once you identify that stock, you're like a pit bull, now it's just a matter of finding good entry points. And when you don't have a go-go market, you're waiting for those dips, which is exactly what you've done, and you're a buyer on those pullbacks. So we'll get into that in a little bit. GE was my pick from the live event last week, and you can see this is about where the live event was.
Beautiful
Actually,
pick.
it would have been in here. GE has been grinding higher and higher. So all along the way, you're looking for entry points. If you use M5 trade signals, you're in, you're out, you're in, you're out. You're just looking for these entry points to get in. ARM was the stock that I highlighted on Sunday. And there is ARM Sunday. You can see how Monday the stock popped right up. Sure, you could have bought it Monday on the open, but in that video, I gave you instructions to wait for a buy signal, and I set an alert. And that buy signal would have come in, and that alert yesterday on that low, that was a beautiful entry point. I'm not going to be taking a look at that explosion alert. So that was a really nice trade. And you could have waited for it to get above VWAP. Had a question on that today in the chat room. Yeah, because the stock went into an actual sell signal, that shows a little bit more weakness than I would like to see. So we get this dip yesterday. Could I have waited instead of taking that buy signal there? It was a higher low. Yeah, I could wait for it to go through VWAP. And AMAT is above VWAP. So I'm just going to show that very quickly because I also was mentioning kind of the mentality that you need to be in this market during the chat room session this morning. So we'll talk a little bit about AMAT and how if you were patient, it looked great on the open. This is an area where you would be considering entering on market support, but we don't have that yet. Harry, what was your pick from last week?
It was Ultha. It mixed bag there. So obviously, I recommended a 405, 410 CDS on Wednesday. So if you put that on, and then on Thursday, obviously it hits 409.59. When you get that type, you would have been able to take around 50% profit. And if you follow the rules of a CDS, a day before it expires, you take that profit at that moment and you have a good trade. If you held on to it, you would have closed it on Friday for a loss. So, it really it goes to understanding what the rules behind these debit spreads are. We do debit spreads in a kind of swing trading way, but they expire that week. That way you get the benefit of the time decay on the short call or short put. And when you hit that number, that sort of that 50% profit number, you went in for $1.50 on a $5 spread, and the position's worth $3, and it's Thursday, the day before expiration. You take that profit there. So if you followed that, you would have made a nice 50% gain. If you held it to the end, you would not have. So that's why I said it was a mixed bag. The trade worked, but it really depended on whether or not someone was familiar enough with how to manage those spreads.
Yes, and in your case, as you'd mentioned, and Dave, same thing. You guys like buying the weeklies, and you like buying slightly in the money or at the money and then selling the next strike price out. And the parameter for the trade is that the difference in the strike price, you're looking to pay somewhere around 30% to 35% of that difference in the strike price. And
Yep.
then it's a very short term trade. So you're looking for whatever momentum has currently been driving the stock. You're looking for that momentum to continue immediately. You need that follow through the next day or the day after. That's how it works. So it is a very short term trade. And you're selling that further out of the money call against it because those stocks tend to have higher option implied volatilities. And you're trying to offset that. And you're trying to mitigate any time premium decay that you might have in that last week ahead of options expiration. So
Yes.
nice.
And
So
just
today,
to add,
oh, sorry, go ahead.
a lot of people do those spreads and they do it farther out. I get that. But what you'll find is you're not going to start seeing profit, even if it moves in your direction. You're not going to start seeing much profit until you come into the final week of expiration, because you really need that short call or that short put to decay enough to compensate for the fact that they're both going up or both going down as the stock is moving. And so that's why we do it in that same week, because you really are kind of swimming upstream when you do it more than a week out. But again, any type of trade that you don't understand or don't, can't follow why you're doing that, as opposed to straight stock or straight calls or straight puts or straight short, you probably shouldn't take the trade until you have a full grasp of the mechanics behind it.
Right. And so I'm going to give you a good example. So yesterday, Harry did a CDS in the chat room and he bought NVIDIA. I believe it was a CDS, and he loved this big volume spike on NVIDIA. And so he was looking for follow through on that position. And what do you think he did on the open today? He took profits on it.
Yep.
Thank you very much. He's in the trade. He's looking for this follow through on this big volume, and he's out. And so now you can see how that was actually a very good move. And we've got the market currently pulling back. Do you want to take the first shot at market analysis today, or you want me to lead off?
Yeah, I mean, I just want to point out I've been obviously bullish on this market for a long time. This is the first time I'm going to be kind of hesitant on the market. And we've had a huge run up, from a low of 539 back on September 11th, all the way up. I mean, we're talking about a 30-point gain here, so like a 6-7% gain in the market in a matter of 2 weeks, 14 days. That is an extension, right? You can, if you put the EMA 15 on the SPY chart, you'll see how far we are extended away from that. You're also noticing, and as I'm sure Pete noticed, the size of these candles. Now look at the candles from September 11th and 12th and so on, and you see some healthy, nice gains closing at the high of the day. And then look what happened ever since September 19th. You're getting these tiny bodied candles here. Your ATR has shrunk on SPY, and it's not a volume problem. If you notice, the volume on SPY actually has been average to above average, so it's decent. But the candles here are really starting to compress. And so is this now there's two ways to look at it, right? So an optimist can look at this and go, oh, we have a nice daily bull flag here, right? Starting with September 11th, boom, you have the flagpole all the way up to September 18th. And now you have the flag starting right there on September 19th going across. A pessimist will look at it and say, well, now you're sort of sitting right at the all-time highs. You have no real catalyst at the moment to drive it higher. You're getting tiny body candles on above average volume. That screams caution flag. So I'm not bearish, because I'm not going to be bearish until the market, until I see bearish price action, right? It's bullish until it's not. But I'm not exactly bullish anymore either. I'm kind of in a wait and see on the market moment.
Okay, well, my market opinion until really end of July, beginning of August, here I was looking for a pullback. And you can see how we got that. And we had those same type of tiny bodied candles, a light volume float higher. We did get a pullback, and this was substantial. This is 10% pullback or so. And it happened, this part of it happened in just 2 days. I mean, we dropped like 5%. That was the yen carry unwind. And so you can see a very, very dramatic drop. But on a move like this, I'm looking for a meager bounce, stall out at a VWAP-Q, stall out at 50-day. That type of stall out would have told me that, yes, this was a time to favor the short side and that sellers were aggressive. They were keeping a lid on any kind of bounce, that the next leg lower would test that 200-day moving average. From my previous live events, didn't happen. Okay, well, now I have to temper my bearishness. And no, I'm not loading up on bearish positions in here. I just started taking a few uh, bearish positions. These were just starter positions. And I'm looking for what's happening right in here. Now we get another sell off. Okay. So this one, same kind of thing. Is this a lower high double top? Well, we don't know. This was a nasty day after the jobs report. And we climb right back and we get above the opening from this long red candle. So again, a second failed opportunity for sellers to demonstrate that they are in control. And yes, now we're just kind of floating higher on light volume. So what happened last week? We had this breakout to a new all-time high. And what makes it suspicious is, first of all, it has triple witching. So triple witching is going to show you more volume than there probably is, just because institutions are unwinding these baskets. Yes, they carry baskets of actual stock and they sell futures against them. So you're going to have volume in every S&P 500 stock, and you're going to see that bear out. But this is all kind of fabricated volume. So do not be fooled. What about the volume after the FOMC statement? Yeah, that was legitimate. I mean, they lowered interest rates by 50 basis points. My question is, if this is a gaga, gotta have it moment, we sure as hell didn't see it right after the FOMC statement. Look at this volatility and this chop back and forth. If you are an asset manager and you are thinking, oh my God, they went 50 basis points. This is huge. We don't have any kind of economic weakness. I am going to buy the heck out of this. Buy everything you can. So then you get a big rally on Wednesday after the announcement. You would also see a massive rally on Thursday, nonstop, because asset managers do not believe they are going to have a better opportunity than this to get long. That's the mentality that tells you, hey, we're going higher. We're going a lot higher. Didn't get that here. Didn't get that here. And instead, what we have is a less bullish scenario. We have a pullback. And now that breakout is being tested. And it was tested on Friday. Now we have a higher low double bottom. And I want to see at least some type of excitement on the part of buyers. Heavy volume. Let's see that retest, and then let's fly off of it with some stacked green candles and quickly take out that high that we put in on Thursday. Did not happen. So we're grinding higher. And that tells us that as day traders, short-term swing traders, right now our mentality absolutely has to be wait for the dip, wait for support, buy the strongest stocks, period. And so that's what happened this morning is we got this nice breakout here. Okay, yesterday's pop off of the low looked great, but not any damn volume. Okay, this is not the type of volume that we want to see. We want to see big sustained volume throughout the course of the day. We didn't get it. And as soon as you get this bounce, how did we spend the rest of the day? In a compression. So you get this nice move higher. Looks like we're poking up. Lots of wicks. Bearish 10p cross. Do not FOMO into long positions today was my message to everyone in the chat room. If you miss a big move up, you're going to have a chance to get long because we're just not seeing the signs that tell us that asset managers are super eager to get long here. And I had pointed out AMAT as a very nice long position. And if you got all FOMO'd early in the day, and you looked at this and you said, oh my God, stacked green candles, I got to buy it. FOMO Joe was buying in here. FOMO Joe is not so happy right now. I told everybody I like this stock. Set alerts. Your alert is tell me when the stock goes below VWAP. Tell me when it's back above VWAP. Very easy to set. And you can see how during that evaluation process, you would not have gotten long because the SPY never got above VWAP and 10p is still leaking lower. My rant is over. So
And I think people
that's where
need
your
to
mindset.
look at how, if you use the trade signal there, right there on AMAT, right? So if you'd stay on AMAT, uh, okay, you could say, all right, but I'm still in because I didn't get a sell signal. But again, these are indicators that are going into your toolkit, right? So you go, okay, let's just say I am FOMO Joe, I'm going and I'm taking that buy signal, I'm buying. Bam, you got a nice profit, it comes up. But now I see it starting to level off, right? Then I start seeing it losing some relative strength, but I don't see a sell signal. Should I get out? Yes. Why? Because you got your profit here, you're day trading this, you see the market is getting weaker, and you see the stock is now no longer responding with relative strength to the market. You don't need to wait. If you're in profit and you start seeing other signs like relative weakness, like the market is starting to weaken, this is going to keep on this buy signal until it's no longer valid, right? You want to make sure, all right, I have profit here. I'm seeing other signs the stock is weakening. That's a time to get out. The better thing to do would have been to say, I'm not going to buy anything in the first 10, 15 minutes of a market, and I'm going to wait. And if you waited, you would have not, then you would have been fine, right? You would have been all right. I'm not going to buy, and then it drops down. Now you can look at it and say, oh, do I want to buy here at 197.91? I look at the market down 82 cents at the moment. Looks like it's weakening. I'm probably going to wait till I see something like AMET get above VWAP here and make sure that buy signal is still on. Then I can get in. So there's two ways you could use it there. Buy signal still active right now. Wait till it gets above VWAP. Wait to make sure that it has relative strength in the market and the market's not going to bottom out on you. Okay, then you buy it above VWAP. Or you were a risky gambler, you took it at the open, you buy it when you see it, you sell it when you see it starting to lose relative strength there.
Yes, and so I just said, let me know when AMAT gets above VWAP. I need that alert. You should spend your time setting alerts and not watching 50 different charts, okay? If you set the alert, you don't have to look at it again. When you get the alert, let's say that right here, closed below VWAP, closed above VWAP, I get the alert. Okay, so I evaluate the nature of this pullback here. Choppy, mixed overlapping candles. Okay, that's the kind of sluggish pullback I want to see. I look at the market though, and I'm like, yeah, I'm just not feeling it with the market. We're staying below VWAP right now. Mixed overlapping candles. So this is a wimpy little pullback. I'd like to see a nice bullish cross here. And I'd like to see some signs that the lows are in. I'd like to see SPY above VWAP. That would get me excited. And if in the meantime I get this alert that AMAT is above VWAP and then I start getting some market strength, I can feel really good about entering this trade. So you just reset the alert and go, no, I'm not that interested here. Okay, let's reset it. Don't have to trade just because you get an alert. An alert means, hey, I breached an important price point. You wanted me to tell you when this happened. Now I evaluate. Now I reset it. Perhaps if the stock had just waffled around here, I would just click on that bar right there, click end of day, click that, Now it has to clear VWAP and clear that price point, and I'll get my alert. But since it's back below it, I can use VWAP again.
I
I did
really don't
just get an
understand why
alert.
people don't use alerts more.
I did just get an alert, so I want to look at it. UPST, that could be my long for today. I think that's going to be my long today. I just got the alert. Okay, look at this volume here. Beautiful. And there is your close below VWAP. When did I set that alert? I set it back in here. I looked at the D1. Let me look at that D1 here. And you can see how it's been able to stay above a VWAP E. It's been above the 8 EMA. It's getting through this little horizontal resistance level in here. So, the stock looks pretty good. I don't know that it'll be my long right now, but it looks pretty good and it looks ready to challenge this resistance level right in here. But anyway, it looked good early this morning, so I set that alert back in here. Our servers know that it is above VWAP, and in order to trigger the alert, it needs to go close below VWAP on an M5 basis, and it needs to close above VWAP on an M5 basis. So anyway, yes, that's how this would work, and using these alerts, very, very effective method.
I
I
might
think I had
steal
a
your
question
pick.
on that. Pardon
By
me?
the way, I really do like ARM. I love this chart on ARM. So just taking a look here. Yeah, it's cleared all these hurdles. Obviously, I'm waiting for it to get above VWAP here, but I really do like
Yep.
ARM. It's a great pick.
This is a nice one. I think you've been trading Tesla from the long side too. That one had kind of been hitting my radar in a number of different searches. And let's take a look at that real quick. Oh, yeah, that's beautiful. Love this breakout here, getting a little extended above that uh, 8 EMA, but it looks poised to challenge the high here. And so one of the themes, I talked about how Harry absolutely loves NVIDIA. He sees that as a long-term long, a buy it on every dip mentality. If that's how you feel about Tesla, then you need to set alerts. You can use M5 if you are willing to buy smaller dips. If you need a bigger dip, then you would use maybe M15. Longer time frame, it would be a more considerable dip. So I'm going to look at what the 15-minute chart looks like. And it's currently on an exit signal. So I'm just going to right click and I am going to create alert. Let me know when Tesla has a trade signal on a buy, and I'm going to save it. So it doesn't have to go on an exit because it's already on an exit. There's your buy, there's your exit. It just has to generate a buy signal M15. And I can also, if I really like it, just to keep tabs on it, GTC, click, click. What was the high from yesterday? I can do that too.
Great thing about Tesla is if you're a dip buyer of Tesla, um, you're always going to get a dip. You have someone who's that stock is so news oriented, so Elon Musk oriented. Every month you're going to have something that comes out that is going to bottom Tesla. And don't forget, Tesla is one of the few stocks, and we don't get very fundamental, obviously, here. We're day traders, right? We're trading price action. But when I talk to institutions, it's very funny because you have this one group that loves Tesla, right? And this is the group that thinks this is a $1,000 stock in 2 years. They're on the forefront of everything. And then you have another group that is on the opposite end of the spectrum and says everything in Tesla is vaporware. It's all based on the promise of something. It's based on the promise of robotaxis. It's based on the promise that they'll be able to monetize their self-driving technology, whether selling it to, believe it or not, competitors, or that they're going to get subscribers coming in on it. But none of it is based on actual current revenue or profit. If you look at the actual current revenue or profit, Tesla's a $50 stock. But so it's all based on this promise. So then that means it's based on whether the balance in institutions of who has faith in Elon Musk and the company that is going to fulfill those promises and hit its valuations or not. So, like I said, it's more of a fundamental thing, but that's why you get such volatility on a stock like Tesla, because this is not, despite the fact here in LA I can't go 2 feet without seeing someone drive a Tesla. When I go to the East Coast or Virginia or anything else, like a Tesla is a rare sight. You don't see many of them. It's not based on their revenue and profit. It's based on their promised revenue profit. When you take a stock like Nvidia, this is a stock that has more money in cash reserves than most small countries. So this is a company that's actually fulfilling the promise now, and that's why you get these sort of more clean technical breaks. That's why when I was very bullish in Nvidia. One of the reasons is if you look at the Nvidia chart, I saw this thing hanging around since September 12th, hanging around the 50 SMA. And when the 100 SMA comes up and meets that, right, you get this sort of, and this happens when, and I've noticed this happen a lot, when you get two SMAs bumping up against each other, meeting each other, they actually exponentially increase the power of whether or not they're resistance or support. So here you have this exponentially stronger level of resistance and support of the 50 and 100 SMA in NVIDIA. And it begins to narrow into this ascending triangle here. And that is the point where you get NVIDIA can either pop off that SMA, which is what it did, or drop below it. Here's the great thing about it. I'm in NVIDIA. If it drops, it's on the SMA. The 100 SMA is 114.70. I now have a very clear mental stop in my mind. So my downside is very limited here. NVIDIA trade doesn't work out. It's because it broke through the 50 and broke through the 100 and it's below 14.70. Bam, I'm out. I take $1 loss, whatever it is. But if it does work, it's going to pop. And so I look at that and I look at the limited downside. I look at the technical setup, and that's why I go into NVIDIA before it pops. Normally you wait for the confirmation of the pop, but I saw limited downside on where my mental exit was going to be and a lot of upside if it springs off this SMA.
Yeah, I like that. And you can also see that if you had no SMAs and you're just looking at this visually, we want long candles like this to hold. We don't jump in on them, but we want to see what happens after that. So the halfway point, whap, 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 they try and drive it down, but that halfway point holds. So again, ignore the MAs just for a second. Whap, whap, whap again. They cannot drive this thing down. That legitimizes that long green candle. And that buyers are very aggressive. They were aggressive here, and on every one of these attempts to drive the stock down, they are still there, and you start seeing higher lows. So I like that. And I think you and I are going to work on a search, Harry. We're going to look for these. Okay. You've been effectively using them for straddle and strangle setups.
Mm-hmm.
And so, yeah, I'd like to do that. I've been thinking about looking for straddles and strangles with 3 days left till expiration type of setups as well. So I think that's something fun that we can work on over the course of the next couple of months. But yeah, great technical comments there.
You know, the straddle and strangle obviously always depends on your option IV, which you have the ability to filter for and search for in Option Stalker there. And, you see some stocks that have these big moves, right? So you see a stock like, I don't know, Visa, for example. Or MasterCard, right? So obviously these stocks had this huge, Visa more appropriate, had these huge drops. And then you're looking at, okay, so Visa yesterday would have been a very good strangle or straddle. It closes right on its SMA, and you see all three SMAs are meeting each other, the 200, the 100, the 50. So now you have a situation where is tomorrow, which is today, that going to bounce off that SMA and recover some of those gains, maybe re-enter the gap at 281? Or is it going to continue its drop? If it continues its drop, it's probably going to be a substantial drop as it's breaking 3 SMAs, which is what it's doing right now. So because you don't know which direction it's going to go, but you do know you're going to have some volatility. It just had a huge drop. It's either going to break 3 SMAs or it's going to head back up to the gap. You look then at the option pricing, you look then at the IV, and you go, okay, this thing here only has a 22, 23% IV. That would have been a decent strangle to put on. That would be my kind of thinking. And all the tools there are in Option Stalker to search for those conditions.
Yep. So that is, I like that setup too. And you can see today that the stock, yes, had plenty of follow through. It's either going to, drop down or it's going to rebound, as Harry had mentioned. I think I might have my long of the day, and it's kind of a surprise to me because I just happened to start looking through charts. I've got heavy buying on right now, and Green Royal Flush is another search that I use. I use them all, to be quite honest. But what I did today is I added this trade signal H1 filter to my lists so that I can really just focus on stocks that I know have that H1 buy signal. They have good option liquidity. My stocks are have a decent price, so they're above $5. So these are just some additional filters that I have on my searches. And as I went through, I really like HUT right here. No, it's not Pizza Hut. it's it is through this 50-day moving average. It is through the 100-day moving average. It's established a nice support level here off of that 200-day moving average, and it's moving higher on volume. So I like this, and it's got lots of upside room. So I take a look at the 5-minute chart. What has it done during this gradual market drift lower? It's held all of its gains and it's made a higher low. I like it. Do I feel like I'm chasing? Not really. I mean, look at the D1. Yeah, it's been strong in here, but it's just getting through. Visually draw this line. There's your horizontal resistance. Happens to coincide with the 50-day. It's been able to get above it. If this move were fake, you would have seen whap, whap, whap with the market pulling back. It didn't even test that 50-day. It didn't retrace to it. It's just grinding higher. HUT is your pick of the day.
But anyone who, I like HUT, by the way, and it's getting some really good volume in here. Over 3 million shares traded already today. I'm still up in the air on my pick of the day, but I would like everyone for a second to take a look at Meta. Now, one thing you hear often from traders, all the time actually, is I missed it. It's already gone up. I'm not going to continue chase. I'm not chasing, but I'm not going. It's already gone up, and now it's probably going to reverse. And a lot of times, what they'll do is they'll take on a short position on a stock that's popped really strong. So you look at Meta. Now, look at it, let's say on September 18th, right? It goes up it's at 544 there. I saw a lot of people on Twitter, X, whatever, trying to short Meta here and thinking this is not going to go up any longer. This is run its core. Look at how much it's gone up, RSI, blah, blah, blah. And now look at Meta. This thing continues to go. It's now at an all-time high. There's nothing. It's clear skies ahead of it. I like Meta here. Meta may be my long pick, even though you've had this huge run up. The only thing giving me hesitation is the distance from the EMA 15, which is obviously causing me a little bit of pause on Meta, and I might prefer something like ARM, which you picked over on Sunday. But Meta should be, charts like Meta, charts like NVIDIA should be reminders, lessons of people who try to time the market or time a top, and they go in to counter trade, kind of trade it. Fine, you took profits. You don't think it's going to go up anymore. It's gone up a lot. It makes sense. If you went into Meta early and you would have made a $20 gain there, you're good. You're out. You're a day trader. You're not a long-term investor. You're a swing trader, not a long-term investor. Fine. But to see people short Meta there was insane. And that's what they did. And that is counter trend trading. And you could see what happens. So anytime you decide to counter trend trade, take a look at a stock like NVIDIA, take a look at a stock like Meta, and see how that works out.
And I am setting an alert when the trade signal M15 goes bullish. It's already saved. It's on an exit. This is a sell signal. So if conditions set up, it's going to go right to a buy signal. And so we'll see. Could it trigger here today? Sure. Could it trigger a week from now? Sure. I'm just going to wait for that alert, and I'm not going to think twice about it. I could also set an alert here using these highs. And in my Sunday video, this is something that I pointed out to all of the members in the chat room on Friday, was that I had set an alert on ARM, and I didn't know when that alert was going to trigger. And so eventually I got my buy signal right in here, and it hit my radar. I didn't know when it was going to happen. I mean, look at how long it took from this buy signal to that buy signal, over 2 days. If it doesn't have follow through the next day, most traders are like, it didn't happen. Forget it. It's off my radar. On to something new. The stock is still legitimate. You love the chart on a daily basis. So these alerts are going to provide you with an opportunity to remember that, yeah, hey, I really like that one. So when I got that alert, it was in here on Friday, excuse me, it was back in here on September 20th. And that's why I included it in the weekly video. And when I looked at it, I went, oh, cool. They tried to knock this thing down below the 100-day moving average, and they couldn't. So that means it's just a matter of time until buyers get a little bit more aggressive and until they rally that stock. That's exactly what happened.
So
So
I'm going to make
same
my.
thing.
Sorry, again, continue, Pete.
I was just going to say, same thing Harry's been doing with NVIDIA. I mean, he has been in and out of that stock, I don't know, for the last 2 months, right?
Yep.
It's like clockwork.
I have been, I mean, from shares to, call options to, you name it. I have been, as you and I both said many times, over time, you get a very good sense. Each stock, well, let me correct that. Each stock that has enough volume and enough, consistency has its own pop personality. And you get to know the stock. And by saying you know the stock means you get to know how institutions are treating the stock by watching the consistent daily price action on it. And NVIDIA is one of those stocks. A lot of people, I know people that just trade Tesla, right? They know that stock inside and out. In fact, I could probably make it a career just following them on what they do on Tesla. I am pretty tuned in to the price action on NVIDIA, which gives me the ability. I mean, Matt Hatton in our room, he loves ASML and he trades the crap out of it and beats ASML every single damn time because he knows the stock. He knows how the stock performs, how it acts, and only external stimuli from the market itself really can throw a monkey wrench there. I did my my trade, and it is a short. So I did a put debit spread on V. I did let's see here. What did I do? The 270, 267.50 put debit spread on V for $1.08. You want to get below $1.25 for something like that. You have a 250 spread. I did 15 contracts on that. And it being a PDS, obviously, it's going to expire on Friday. So I like the relative weakness there. I feel the follow through that we saw today, breaking through three SMAs. Probably you're going to get continued follow through. It's obviously reacting to the rate cuts, which is detrimental to credit cards. So I like the trade. V short is my trade.
And it is already intrinsically worth 75 cents. So it is going to move very well with any continuation in that stock. I think I've heard something about they're going to be capping. There's so much going on right now politically. You name the company, and they're probably going to be influenced by future policy. But big banks and credit card companies are villains. And I think I heard somewhere that they're talking about capping interest rates on credit cards at 10% and all this other kind of stuff. So I don't know if any of that's coming into play, but we had consumer confidence was extremely weak. And when consumers are optimistic, they spend a lot of money. This is kind of negative for consumer spending, but there's obviously some news out there. So you probably know the news, Harry. I haven't checked to see what that news was that caused that big drop on big drop yesterday. But you should, if you're going to take the trade, you should kind of know what the heck is happening there. I'm such a
Mm-hmm.
technical trader that I really don't even care. I just look at the chart and I'm like, okay, there's the move and there's the follow through. That's all I really need to know.
Oh, looks like the professor has joined us. Hi, Professor. Uh, great trader, the professor, Richard. Quinn
Richard,
wants to
Richard
know, by the
who? I
way.
don't know, Richard. Wow.
Quinn wants to know from you, Pete, can you give more information on Trade Signal Tuesday? I have not been able to access Option Stalker through my old account that I previously took a free trial on.
You can click the chat support that we have on our website, click help, and we will be in touch with you and get you set up for it next Tuesday. If you have taken the trial previously, your previous credentials that you have to log in are all you need. You come into the website and let me go to the website. And it's www.oneoption.com right here, and then click login right here. And when you do that, just enter your credentials. And on Tuesdays, you'll be able to go right down to Option Stalker in the dashboard. Should probably put that up. You click that, and you are logged in and ready to use it. And then you can check out our trade signals using Option Stalker. And we've got
That is
instructions on how to do that.
that's what you just to float your boat for a second, Pete. That to have you built the trade signals. They've been there. It's 10 years, a decade's worth of your work, and you're basically saying to people, look, you can either come in and take a 2-week free trial, right? Where no obligation, take a 2-week free trial, try it. If you've already taken the trial, but when you did, there were no trade signals then, now there are, or these trade signals, now there are. So you feel like you've missed your opportunity to see if they work. You don't want to sign up until you see if they work. Hey, every Tuesday, come in. If you used to be a trial taker, come in and you'll get access and see if they work. See for yourself. I love the trade signals. I use the trade signals. I really encourage everyone to give them a try and see if they work for you. So someone here, what are your thoughts on the commodity channel index as a signal? CCI rise above 100% line for unity. Is this a bullish sign for continuation of the bullish trend? Well, let me tell you about all of these holy grail type things. One, lagging indicator. It's a momentum indicator. The CCI lag behind actual market movements, particularly when you have a fast moving market, which makes it very ineffective in a strong trend if you're trying to identify a strong trend. It also, so you say, okay, it's difficult in a strong trend, but guess what? It's prone to generating false signals, even in a choppy and a sideways market. It can often indicate overbought or oversold conditions when the market's simply consolidating. So traders will enter and exit prematurely. It's highly sensitive price movement, and it can result in these whipsaws back and forth in it. You also get no clear exit signal on these things. So like most of these type of things, you can cherry pick and say, oh, look, it was right on this particular stock, but look at it overall. And I guarantee you it's not going to give you anything more than cluttering up your chart. So that is my opinion on the commodity channel index. And the reason, by the way, Pete or I can talk instantly and freely about any of these indicators you post, no matter how esoteric, and believe me, some of them are esoteric as hell, is because we freaking tried them all. It's not like we go, oh, we built this or Pete built this and I know this and that's it, we're sticking to it. We have tried all of this shit, every single one of them. And if it worked, if RSI worked, I'd be out there telling you free use RSI. If this were, I would be out there telling you. So there's really not, this is our livelihoods. This is what we do. So very rarely will someone bring up, hey, have you seen it? And I'll be like, oh, I've never seen that. And if it happens, I will go and investigate it fully. But 9 times out of 10 or 99 out of 100, Pete and I have tried the hell out of these things. And trust me, if it worked, we'd advocate for it. Okay.
That trust factor is super important, and that's why I want people to come in and try the trade signals. See if you feel that they're legitimate. See if they provide you with good entry and exit points. That's the only way you're going to know if you can really use something in your trading. You've got to build that trust over time, and all the Elliott Gone waves, wave theory, and I've looked at it, I've tried it, it just didn't resonate with me. Maybe there's some guys out there who have decoded it and they do really well with it and they explain it. And if you happen across those sites and you start to use it, good, stick with it, man. Just there, I'm not saying that this is the end all be all, okay? This has been my experience. This is what I've tried. This is what has consistently worked for me. It makes sense to me. It resonates, why relative strength works, how it's a tell that institutions are involved. That's why I use it. And the fact that I've got major moving averages that I lean on, the fact that other traders are looking at exactly those same data points gives it relevance. That makes sense to me. Okay. AVWAP-E, that large institutions may be evaluating the earnings report that just came out and that they may be giving Citadel buy instructions over the course of the next 2 weeks to enter this stock well and to honor AVWAP. Yeah, that makes sense to me. I mean, all this stuff really makes sense to me, and I've used it and I've seen it, so I incorporate it into the trading system. But I don't cloud what we do with 5,000 different indicators so that every week we're swapping in and out of, hey, this one worked this time. Hey, we like that one. Hey, this one's working right now. Let's use that one. You really hone in on the tools and the indicators that work for you, and then you refine your methods around it, because Harry's written so many articles on the emotions of trading and the mental aspects of trading, that once you develop this tool set that you really feel you can depend on, then it's a matter of mentally being prepared and having the confidence to take the trades.
Quinn, first, a couple questions from Quinn here. First here, Quinn, you're asking about INTC Intel. That stock has been beaten all to hell. In fact, it dropped to a price point that was literally if you broke the company up, it would be worth more than what the stock was at the price point for. Look, on a technical basis, it's in the gap. The gap started on 8.2. But look at this 50 SMA. Now, that when you have a stock like this, and when I say a stock like this is a stock that's been pummeled. This stock has dropped like 50%. So now, in order for people to get this thing out of the doghouse, out of jail, out of investor jail, they're going to need to see something, some kind of technical break, some kind of news. And here you have your first hurdle, the 50 SMA. And it is at right now 23.23. Right now it is above it by 20 cents, but barely above it. And it tried to get a little bit higher today. It went up to 24.06 and fell back down. Obviously the market as well didn't help. So I would wait to see a clean break there. And I would not you look at it and go, wow, there's a lot of upside here. I would hold off on INTC until I see some clean breaks of that 50 SMA at least. Um, and then I got asked, do I still hold SMCI? Yes, it is my one albatross. I still hold that stock. I'm waiting for the 10K to be released. Obviously, believe it or not, I'm still probably going to wind up for the quarter, thanks to Nvidia, thanks to Amazon, thanks to all these other MSTR that I'm holding right now. I'm in an MSTR at 129, and I sold the covered calls at 150, 128. So even if I get called away this Friday, I'm still making plenty on that. But yes, I am still holding SMCI for the moment. It has a split coming up as well. And what made me buy $5 million worth of MU yesterday? Well, I don't know. I mean, it's got earnings tonight. It's an earnings play. We don't talk about the earnings plays here. But whenever you see me make an earnings play, the reason why we don't do earnings plays and we don't advocate earnings plays is because at best you're a 50-50, right? You're taking a 50-50 gamble, because even if the earnings, you've seen plenty of times, earnings are good, guidance is good, stock drops. And if you're playing options on it, all the worse, because your IV gets crushed and you have to do that much better to make up for it. The only time that I play earnings is if I feel, and they're not always right, they certainly aren't always right, but that they are better than 50-50, that JPM gives me some info, something that indicates to me that I have a better than 50% chance, 60 maybe, 65, something. And so that's what happened on MU. I'm getting signals from JPM telling me they are getting increasingly bullish. They feel that the drop in the stock that reached a high of 160 and is now at 95. And stock has been punished for quite a while, in the doghouse for quite a while. It has lowered the bar enough on these earnings that you have more upside than down. Might they be wrong? Hell yes. But their information, I feel, gave me better than a 50-50. So that's why I went into MU. I hope that answers all of your questions, Quinn.
I had a question on relative strength. If you have a stock with relative strength, should you just hold it for a single night instead of expecting intraday moves, the better trade on lower volume days? I'm not quite sure that I understand the nature of your question, but what I will tell you is that if you have relative strength on a D1 basis, okay, and we use Harry likes to use a 12-day moving average on it. I use a 10-day. But in any case, you're looking at it over an extended number of days. That D1 is going to be really rock solid. Okay. M5, it flips all over the place back and forth. If I look at AMAT, it's strong, it's weak, it's strong, it's weak, it's strong, it's weak. That's on a 5-minute basis. Okay. That does help us time intraday trades, but you do not lean on an M5 relative strength or relative weakness for any kind of overnight position. You want to first make sure that you've got that strength on a longer term swing trading basis. And when you're comfortable that you have that longer term strength, then you can zoom in and you can start looking for good entry points. And then, yes, you would want to be focused on stocks that have been able to preserve relative strength all day long. And if I put up HUT, that's probably going to be one that has been strong all day. And then you would be looking for these little dips into weakness for possible entry point on the notion that it's going to recover from those very quickly. So I hope that answers your question. And I had another question on spot. What do I think? Take a look at spot very quickly. Nice grind higher as the market is drifting lower here. Take a look at the D1. That is a great breakout right there. It's getting pretty far from that EMA 8. So I wouldn't really want to chase it right now, but I have ways of addressing that. It's on a exit signal here. I want to see it on a buy signal. I'm going to create an alert and I'm going to go to a 5-minute and I'm going to set the alert. When I get it, I don't care if it's a day, 3 days, a week later. When I get it, I'll evaluate it. That's how I would approach it right now. I wouldn't be inclined to chase it right now, but it does look quite strong.
Luca. Every time I see Luca's name pop up, I know it's going to be a good trade. I don't know why you're not in our in the chat room, Luca. You'd be a great addition there. If you are, forgive me. I just don't know what your username might be, but if you're not, you would be great. Every time I see your trade suggestions, they're generally excellent. I also like spot, but yes, I would wait to for it to pull back a bit to the EMA.
And we expect seasonal weakness. September and October are seasonally weak. Well, we're almost into October and we have a new market high. Okay, so you cannot just trade seasonal strength and seasonal weakness. And in my opinion, what's going to matter, given what we've seen in the market, okay, we've already talked about breakouts and what we like to see in breakouts. We like to see boom, 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 follow through instantly. That tells us that buyers are aggressive. Didn't see that after the FOMC statement. Thursday, I believe, was not window dressing, but triple witching related, which, by the way, we will have window dressing coming up over the course of the next few days. That is going to artificially inflate trading volumes. So be mindful of that. Whatever moves we see are going to be influenced by window dressing and not per se because there are lots of buyers. They're going to have lots of buyers and sellers, period. So that's going to increase the volume because they are rotating out of stocks. They're selling some stocks, they're buying others. So, uh, back to what the market's going to do, I feel that the economic data points next week, again, we're in wait and see mode. Okay, the Fed, did they see something? Are they worried? Are the jobs numbers going to come in soft next week? If they do, oh my God, the Fed knew something was going to happen. And that's why they cut 50 basis points. And you could see a sell off next week. And by the way, next Wednesday, I'm playing hooky. I'm going to do some fishing. So I'm not going to be around for the live event. Harry and I will talk and we'll see if he wants to do a solo or maybe he wants to invite someone to do a live event
Yeah, it'll be
with him.
fun.
But I'm going to be out for it. But I can already tell you ahead of time that the market's going to be in a holding pattern a week from now. And it's going to be waiting for the jobs number. It's going to have seen jolts. It's going to have seen ADP. And if we see a lot of weakness in the job market, the market is not going to like that after a 50 basis point rate cut. If we get through that jobs report and we have 150K plus jobs, everybody's going to breathe a deep sigh of relief,
Yep.
and then you could see follow through buying. So we're just in wait and see mode again.
By the way, I just have to point out, I love how numb the market has become. If you look at anybody looks at their news feed right now, I have like 30 alerts here coming across with basically Putin saying he's going to use, if someone sneezes at us in the wrong direction, we reserve the right to use nuclear weapons. I mean, he's given this entire speech here that has apparently set the world on edge. And the market's just like, meh, whatever. That's okay. I've seen it all before. I mean, 10 years ago, alerts like this would have sent the market into a spiral. VIX would have popped. Everyone would be going crazy. But in today's day, it's sort of like any other news. There's a hurricane coming into Florida. It's just, I mean, I don't know. It's just kind of funny.
Well, you get the polls too are like that. Oh my God, Trump's leading in these states. Oh my God, Harris is leading in these states. Every day they've got new polls coming out, and if you go on YouTube, you get flooded both ways. It's like, oh, today she's gonna win, tomorrow he's gonna win. It's pretty
Yeah.
funny.
What's going to happen to Bitcoin if he wins? What's going to happen to tech stocks if she? I mean, look, the market is the market, and it's probably it almost is a living organism, and it's one of the greatest forces on the globe today. And the market can looks back historically It looks back historically what happens when a Democrat wins, what happens when a Republican, what happens when you have a split Congress, a Republican Congress, a Democratic Congress. They look at all of those factors. They're not looking at propaganda. They're not looking at a YouTube video. They're looking at actual numbers, what actually happens, and they're responding to it. And trust me when I say institutions have all of that. But yes, there's also a zeitgeist factor. There's also algorithmic factors. There's a panic factors. Just follow the price action. Don't try to predict it. Don't try to go, oh, I'm predicting this person's going to win, so I'm going to buy Bitcoin or sell this because this person's going to. Just follow the damn price action. I just thought it was funny that basically the largest the country with more nuclear weapons than any other country on earth basically just gave a list of all the ways that they would use them, and that list is now the bar is so much lower than it was and the market just kind of sneezed and was like, yeah, it's fine. Someone asked here, question is swinging short. What's your minimum criteria regarding market cap and float, maybe volume, short interest, price, to not get trapped in a possible mega gap down? Well, don't confuse fundamentals with technicals, first of all. But if you ask what I think you're asking, just don't trade shit stocks. Honestly, I mean, that's about as fundamental as you need to get. Don't trade shitty stocks. If you have a stock that has a float of 4 million and is a $4 stock that was $14 yesterday, is $4 now, and is popping all over the day, just don't trade it. Just stay away from it. Don't look at those YouTube videos where people are, oh, I just made $50,000 just shorting this. Look, trust me, they don't. Just trade quality stock, because stocks like that are not going to follow technicals, right? You need volume. You need, let's put it this way, you need institutional involvement to follow technicals. It's kind of like being on a poker table with shitty players, right? You could have pocket aces. They're going in with 7-2 offsuit and 7-7-2 flops. I mean, what the hell, right? Because when you're dealing with those crappy stocks, what you're dealing with is mainly crappy retail traders trading them. And crappy retail traders are about as reliable as that poker player with the 7-2 offsuit. So you want stocks that are filled with institutional money, because they're not making those stupid plays, and you can follow the technicals on them. Stocks that can be predictable. That's what you're looking for. So make that your minimum criteria. Don't trade shitty stocks.
I'm going to do a little technical analysis. S&P 1OP indicator. Spent many years on this. It is used in our trade signal configuration. This is just the line study. Here's how you use it. It's always deadly accurate. So I'm just going to look at a few days, but man, it's been just so spot on over the course of the last 3 weeks. It's kind of crazy. But there's your bearish cross. It's telling you up here, we got to be aware that there's some selling pressure coming up here. Okay. Not here, not here, not here. It's telling us that here. There's your bearish cross. Now we start drifting lower. You can see how in here, it's tried to cross a few times, but SPY can't get above VWAP. Now you get a bullish cross. This is actually what we call a bearish divergence, because when we see the indicator moving higher, we're expecting a bounce in the market, but we haven't seen that. And the further we get into this, the more likely it is to not produce. And this is telling us that this trend strength here is actually pretty strong. Get your next bearish cross here. That cycle is going to be very negative, and we're likely to see another new low of the day. Here, bullish cross. Should see a little bit of a rally. You get one into the close, but it was a kind of lackluster day. There's a sell signal right in there. Okay, you're above the zero line. Here it's saying, watch for danger, get a bearish cycle, not really much production to it. There's a warning sign right there on the open. Got a bearish cross right there. Whoosh, there's a bullish cross. Hey, pretty damn nice timing, wouldn't you say? All right, so same kind of thing there. Got a bearish cross. I mean, if you look back, there's a bullish cross right there. This is telling you there's danger ahead. compression, compression, compression. Then you get your drop. All I'm going to do is just go back through and look at some dates here. Big gap down, bullish cycle, doesn't produce, market leaks lower, bearish cross, should be more downside. There is more downside. Bullish cycle, market lifts off. This is how we time all of our cycles, and it is predictive, not reactive. So for those of you who are S&P traders or looking for ways to improve your timing on stocks, this is what we use every day to help us enter and exit trades and to tell us when a potential reversal is coming, when we can expect a continuation. So we're looking for these benign cycles. I don't talk about OneOp very much, but I do have many videos on my channel for it. I also have extensive articles written about it in the system on my website.
Last question I have here. Most institutions are bearish on SPY to the end of the year. Some 15 out of 17 large financial institutions think SPY will close the year below the current level. Do you listen to that, and how? Not sure if that is entirely accurate. A lot of the ones I've seen have it between 570 and 600. I have seen a bunch that are below 570. Keep in mind that what is generally happening here, because I see it happening, just based on the desks that I have here sending me recommendations, is what institutions really are doing right now is they have a lot of very crowded stocks. NVIDIA, Amazon, these are very crowded stocks. When I say crowded, it means they have a lot of their institutional clients and money into these stocks. They're not yet ready to tell those clients to sell, right? They're not saying sell these stocks. And you would see if they did, you'd have this huge bam. And particularly because the average analyst price point on these, the average analyst price point on NVIDIA is like 155, 160. That means they think in 1 year from now, that's where it will be. And they're looking forward a year. So these are not day trade. These are people telling their clients to hold on. But what they are telling their clients to do a lot is hedge. I'm getting a lot of email, a lot of things. Hey, maybe you should do a 560, 540 November SPY put. Hey, maybe you should do buy some IWM puts or short IWM here as a hedge. And so when they're putting out these hedges here, they're usually moderating their S&P goals, because they can't very well say, we think S&P is going to be at 600. Oh, but hedge, because then investors be like, well, what the hell? Which is it? So I think what you're seeing is a reflection of a little bit of tentative fear on the part of institutions, worried that they need to protect their clients in case there's any significant drop. But you'll always get that whenever the market's at an all-time high. Whenever the market's at an all-time high, the first reflexive thing that an institution's going to do is try to get their clients to put on hedges. And if you notice, and you look at the SPY daily chart, well, you would have had them putting on hedges back on August 30th. You would have had them putting on hedges back on September 18th. And all of those hedges would be, underwater right now. So, the market just keeps going up. I'm not saying they're wrong, but again, I'm going to look at the SMA 50 as my guide, which is 551, quite a bit away. But that right there is going to be my kind of guidepost on the market for the end of the year.
My take on it is ignore everything that you hear institutions saying. Pay attention to what institutions are doing, and that bears out in the price action in the market. Two very different things, because the analysts are separate from the proprietary trading arms of the institution. They have to be. There's a China wall. They don't communicate with each other. So what analysts are you listening to? How right have they been? What the heck is your track record? For that matter, you shouldn't even listen to me. Seriously, you shouldn't. But if you went back and watched my videos and you went back 15 years and you looked at every major market move and you watched specifically those videos to see how I was positioned, and you found that this guy is actually pretty right. Well, okay, then you've at least established trust, and then maybe I'm worth listening to. But other than that, price is truth. I don't listen to what anybody has to say about anything. I just watch price because the candles tell me the story of what's happening.
100%.
I had a
All right.
question on, oh, let's see here. I had a couple of questions. ANET, what do we think of that? Let me bring those charts up very quickly and then uh, ANET. Today it looks pretty good. ANET's been a nice grinder in here. It's through this horizontal resistance. Yeah, it looks good. I mean, it's holding its own right now. So ANET looks like a decent long to me. And another question on VRT, which is right here. It's on one of our lists. That's actually a very nice breakout right in there. So this is definitely a buy the dip, buy the dip, buy the dip. Set those alerts, evaluate those alerts. Try and catch any little dip that you can because it's getting a little overextended right in here. And you want to be able to catch these moves right in here, okay? When they try to test that moving average. And I think Harry is going to be writing an article
Yep.
on trading stocks that are bouncing off of support like this and trying to catch these moves instead of getting into the mindset that here we go, this thing's going to hell in a handbasket. We got that poke through and now I'm short, 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 and ah, stock goes higher. So I think you should be watching for that. But yes, um, try and catch them around those major moving averages. And once they lift off, this is confirmation of strength right in here. And this tells you, this follow through tells you that, yes, I want to be a buyer. I want to be a buyer, but I'm going to be smart and I'm going to try and buy those little dips. If I don't get the dip and I can't enter, it's okay. I'm going to let it pass because of the 24 other stocks that are like this that I have set those alerts on. A couple of them are going to give me that opportunity.
Right. I just have one quick question here. I'm a day trader shorting small caps, but I'm pretty dumb at trying it for 5 years, not seeing any success. Want to switch to large cap. What's the best way to start? One, read the wiki. Two, read the system. Where the wiki is right there available on Real Day Trading Reddit. Sign up for the free 2-week trial there because when you're looking at small cap stocks, now I don't know how much you're talking small cap stocks when you're looking at what size of the company. If you're looking at these $1 stocks or $5 stocks, or you're looking at like $100 billion companies as opposed to $1 trillion. But large cap stocks, and we're talking Nvidia, Amazon, Tesla, MU, Visa, like the S&P 500 companies, even the PLTRs. These are institutionally traded stocks. We keep coming back to institutions. Institutions are making money. You want to follow what institutions are doing. Institutions are not trading those small cap stocks, really. I mean, they have a couple of desks that might be fucking around with them, but generally they're not. So they're not following any rational price action. And that means they're not following technicals. $1 to $10 price stocks, there you go, really small. And it might seem like, oh, I can get a lot of shares of those, but it doesn't matter if you're losing on the trades. Follow institutional trades by following relative strength, relative weakness against the market. Follow correctly identifying support and resistance. Look at the trades and put it all together to make educated guess on trades, like I did with Visa, for example. You want to have, I have 10 steps there. You should be trading with paper trading until you hit certain milestones, like a 75% win rate, a certain profit factor. Then you should move up to maybe one share at a time. This takes 2 years to get good at it. Now, you've been doing that for 5 years. So you've taken the first step and realizing constantly repeating what you've been doing when it hasn't working is not a good idea. You're playing roulette. There's no reliable way to beat the market on a $1 to $10 price stock. Your mindset's always going to fuck you up. You need to be able to rely on consistency. You need to be able to look and see, yeah, wow, all right, the 50 SMA is holding there. Yes, the daily chart does look good. It is stronger than the market is right now. I see a buy trade signal. I see the market gaining strength. This is a good stock to buy. I'm going to take some call options or get a call debit spread on it because it's a $500 stock. So I can't buy the shares, but I can do some option activity here on it. And I'm going to take profit at this level. That's what you need to start looking at, and it takes time to get there. So read the wiki, read the system, and join. Take advantage of the two-week trial that Pete has. Check out the chat room and see what you think. That's kind of my suggestion. And yes, Amgen certainly looks like a hell of a short right now, Jack. That is a good node. You want to take a look at that towards the end here now, Pete?
I'm
AMGN.
going to, and I got somebody else asking me about DUOL. Really incredible strength. Wow, what a stock. Yes, but you want to set those alerts. You want to buy dips. You can see where your entry points would have been on a stock like that, and they've been damn good, but I hate chasing stocks. The wiki is the best free learning resource that's out there, bar none. Yes, if you take the 2-week free trial, you have access to a course I wrote called The System. Yes, I am writing articles. I've had my 6-month reprieve. I'm going to be finishing the stock second section. I've got about 15 articles to write, and that is going to be my personal goal before the end of the year. And then I'm going to write the final section, which is options last. And I hope to finish that by March, April. And look at the article that I'm writing right now: Momentum Trading Small Cap Stocks. And right here, large institutions, they don't trade these stocks. They may take an equity stake in the company, but they don't trade these stocks. And so there's very little information available to them. You've been trading for 5 years. That means that you've had marginal success. You probably have an awful lot of raw trading skills. Now you just need to get into a system where a successful system, proven system like we have. And I think that transition is going to be pretty easy for you because you've already learned the mental aspects of trading. 5 years is a long time. You probably have better skills than you're giving yourself credit for because you would have been washed out long ago. So Amgen, I need to look at that one as a short. Oh yeah. That's a nice drop, and you got that drop below the 100-day moving average. And this could actually set up for one of Harry's overnight strangle plays.
Yep.
Stock is either going to visit the 200-day moving average or it's going to fly back above the 100-day moving average. So I would check those option IVs and see what's going on. And this stock tends to be very choppy. It's a biotech, so it could go both ways.
Yeah, I mean, if you were to do that, you get sort of like the 320 calls and the 310 puts for $2.30, and see where it's going to wind up. This is a huge move on this stock, and like you said, it's either going to test that 200 SMA or it's going to fly back above. So that is a good strangle candidate right there. All right, and thank you, Jack C, for the recommendation on Amgen. Okay.
And final look at HUT holding the 50-day. Take a look at the market. What do we got here? Got a little bit of a bounce happening, but this is not a good sign for the market today because every little rally has been suppressed. So market looks a little bit weak in here today. We got 3 hours left. Got to wait for that support to be formed. So my bullish pick was HUT. And given the market drop in here, it's hugging VWAP nicely. It's still up for the day. So I still like it. I think it's a good long. And Harry, your long was
My short is I'm doing a short and it's Visa.
Visa. That's right. Okay. Visa is your short. And so I'm going to set an alert on that to keep an eye on it. And I'm going to put an alert right there. And I'm going to right click, create alert, and I'm going to wait for that trade signal to come up bearish. Thanks so much for attending, everybody. We will see you Sunday. I'm going to do a recording Sunday, and next Wednesday, look for Harry to do the live event, and maybe he'll have a guest with him.
Yep. All right, everyone.
Trade well. We'll see you
Thanks.
then.
Bye.